Ladies and gentlemen, we are live. We are live once again. It's been a while, but with the Tesla earnings and everything, I listened to it on my own, and I just thought, what's the point? Why don't we get a couple people together and listen to earnings together? And I'm using a new software, so I use StreamYard a lot, but with the earnings call, you guys can't end up seeing the stock price. So we're going to try to change that. That should work. Let's hope. Okay, and so yeah. We'll try to get the stock prices during the earnings. We'll try to get all of the actual earnings results, what people are looking forward to. We got little comments, so we'll see your comments there. A whole bunch of stuff. It'll be lots of fun. But let me make sure that I have everything. I have like a control panel of monitors in front of me now, so this is going to be a lot of fun. But yeah, let's go ahead and talk about Google. Google's a stock that I own now. Let's see if this works. This should be the same format as before. Okay. So that works. And yeah, we'll be able to listen to their earnings whenever it comes up. But aside from that, we can review what they're going through and everything, and then bing, bang, boom. Okay. Now, let's make sure that this is nice and big. That's smaller. Okay. That should be bigger. And then we'll look at their data sheet as well. So this is just my own custom screenshots, but everything is still there. The chat should be below me. And then whenever we want to, we can swap over to this. And then that'll just take over. So we'll be able to see that there. And if it needs to be changed and maybe Google isn't taking up a large portion of the screen, we can just swap it or something like this. All right. So we'll have lots of fun. Cool. But for the time being, let's swap that off. All right. So let's go ahead and take a look. So we have different earnings breakdowns that we're going to try to pay attention to. But mainly the thing that I think everyone's going to be excited about is the different companies that sort of Google takes over. So Google search, YouTube ads, the Google network, and then that's all falling under, advertising. So those are all subcategories of the larger Google advertising category. Okay. Then we have their Google subscriptions, platforms, and devices. Think Google One, think the Pixel phones, all of those different subscriptions and everything that falls under that. So that'll be in their own separate category. Okay, and then whenever we go back to visualization, we'll see all of these different breakdowns. Okay, so remember, Google with advertising is very cyclical. Okay, so Q4 is not going to be, or like Q1 is not going to be as weak or strong as Q4 because holiday spending and everything. So we are going to see a little bit of a pullback. If we take a look at YouTube ads, for example, you can see, wow, this is messy. And is there any way for me to, here, let me see if I can make this better because it's showing half the screen is being taken up by that. Yeah, that'll make it a little bit better. So each individual Q4, you're going to see large spikes, and that's inclusive of the last quarter that we just saw. So you're going to see a drawdown. Okay. In fact, we actually saw for earnings expectations. So we have their diluted EPS of $2.02, which is Wall Street expectations. And then we also have revenue expectations that should come in at about 88 billion, 88.8 billion. And then the only reason why net income is not showing up is I don't have a diluted share count. So it'll probably be something along the lines of just a little bit smaller than where we were before. So let's just trim off that 48. And there you go. $24.8 billion in net income. If they can potentially hit that, then they are beating Wall Street expectations, or $2.02. They're going to show off both of those. All right. Let's go ahead and jump over to the stock really quick because that's about to pop off here. I'm just customizing this. This is all so sloppy, so I got to get it better on this app. But Yeah, we'll just look at it like this for a second. It's not blocking anything. I guess you can see me scrolling in the background. I don't know. This app is a lot different than what we're used to. Google is doing well today. I mean, the entire market is. If we take a look at the Mag 7 here, let's just go through some of the names so we can look at, you know, NVIDIA, for example, large pop, 3.5%. We have Google. What's SoFi doing? SoFi is up nearly 5% on the day. So beautiful day there, $12.31. Yeah, and that minimized everything. Great. I got to get used to this. Hood is up 7.6%. Where's Amazon today? Up 3.2%, $186. Great to see. But obviously, a lot of people are going to be focused on big GOOG today. So that's what we're going to be focused on as well. I also need to move all this around because the chat is being blocked by my thing here. Here, bear with me. Just going to transition to this real quick and see if I can pull that up there. Awesome. Okay, that's much better. I can now read the chat. It's simple. Buy Google before and after earnings. Yeah. Yep, it is. It can be that simple for sure. My life savings are in Google, says Anonymous M. Jeez. That's conviction. That is conviction. Okay, let me see if I can make this a little bit bigger because I'm not liking the way that looks, but earnings should be coming up. So let me bring up this because we got about 8 minutes left. So let me get all the slides ready. Okay. All right. I'm ready for release. We'll also bring up X really quick just to see if they're doing something as well. Even Joby is up today. Oh, gosh. I don't hold that stock. All right. I don't know why it's being associated with my name. I've got nothing to do with that company. Yeah. Okay. And then we'll also just keep a quick X thing open for any mention of Google. Why don't we do that as well? There we go. All right. And we have the webcast open, which it's Google, so it's on YouTube as well. All right. So today we will be looking at Google, right? I'm a shareholder of this company. I want to pay attention to the earnings. I'll be listening about Google Cloud. If you guys know anything about my strategy right now, as I've been talking about it online, like my whole strategy is to just pour as much money as I can into NVIDIA stock. Okay. It's what I'm buying. I'm not looking to trim Google to buy NVIDIA. Right now, I still have some ETFs and stuff like this, like safer money. Okay. Things that do well on the downturns. But then once they're down, once the entire market's down, then I try to rotate that out and put it into more risk on assets whenever I think that there's things that are overselling, right? And NVIDIA is definitely one of those. I think that's by far one of the cheapest companies in the entire market. I know that sounds silly because it's multiple trillions of dollars, but they also make hundreds of billions. So anyway, so in this video, I don't only just want to talk about Google. However, we will be listening to their Google Cloud comments and advertising and everything like that, because that's going to tie into, you know, the trade desk position that I have and Google, and then all of the constraints we're going to listen to for NVIDIA. But I'll generally take questions about anything, whether that's SoFi or what have you. All right. Just heading back, Google is above 161 right now, 161.30 going into the close, last 5 minutes. All right. So we'll keep an eye on that as well. And then essentially I just tried to like port over the format that I had from StreamYard over to this. I won't be using this. I'll be using a mix of both. But I think for the solo streams, this just works so nice. You guys can see each other's comments. Obviously, you can see that before. But then whenever people are rewatching the videos online, it just doesn't, like, no one knows the questions that I'm trying to answer and everything. So I think that that's important. What time are earnings released? So for different companies, they have different timings. However, for Google's, it's at 4:03. So actually, this is a new company that I just partnered with that I think is super freaking awesome, which is Earnings Hub. I used to use it personally all the time and never really had a, like deal with them or anything like this. So now I actually partnered with them. So they gave me a link for a discount for you guys to potentially use their Pro version, but you don't even have to use Pro. If you go and just sign up for Earnings Hub, you can just see all the calendars for, like, okay, this is when all the different companies announce, but it's even more in depth than that. So if you go ahead and go to Google, for example, you can see how they're doing, what their history on earnings and revenue and EPS is versus what estimates we're expecting, right? And then you can even see the exact time that they're expecting to release earnings, which is 4:03 p.m. Okay. And then after that, you can see all the extra stuff and, news and analyst stuff and all that extra jazz. And it's free to sign up. Support the channel if you guys want. It would be great. Link in the description. All right. But yeah, that being said, with earnings, we are expecting 88.87 billion. That's the consensus for Wall Street across the board as of today. And then $2.02 of EPS. So we're going to be keeping an eye out for that. It doesn't necessarily need to surpass that in order to beat earnings, but yeah. In other news, we have Intel today, T-Mobile, these sort of companies, but really I'm going to be focusing wholeheartedly on Google. All right. Let's see what the comments are saying. Sending love from London. Nice, man. London town. So yeah, sorry, 4:03 for those earnings. And then the actual call will be at 4:30. So we'll be listening to the call. We'll actually see the stock chart and everything while we're listening. I'm praying there's no audio issues. Okay. New software always comes with issues. So there might be some sort of audio issue. Let me know as early as possible. In fact, maybe we should just test something out really quick. Let me test something. I just put out a video on NVIDIA. We'll just watch the first 5 seconds of that to make sure that things are smooth and that you can hear audio that's coming through.
Ladies and gentlemen, I've been an NVIDIA
Okay. First of all, can you hear it right there? Can you hear this?
shareholder since 2018. And this is by far the most...
Did you hear anything? I need audio help. Anything? Okay. It's on a little bit of a delay. You do hear it, even without it on my screen. That's scary. That's scary. Okay. Loud and clear. Good. That's all right. All right. Sweet. Okay. Well, yeah. All right, 30 minutes till then. The earnings should be out. I'm going to keep an eye out on X. We are going into the close, ladies and gentlemen. Really quick, while we are waiting for any updates, let's go ahead, take a look at the stock into the close. This is a minute-by-minute chart, so you can... Yeah, and we're closed, by the way. So everything else that you see here is all after hours. Google closed at 161.47. Okay. Let's go ahead and see what the big movers of the day are. Service now up 15.5%. It's a stock that I have in my portfolio. SMCI up 8.8%. Robinhood is up 7.8%. Snowflake up 7.6%. CloudStrike up 7.3%. Palantir up 6.9%. Nearly $108 a share. But big old GOOGs is quite a ways of the way down. There's definitely companies moving much faster than this. But let's track how they're following into the close. Big green candlesticks. Let's see if there's any news so far. Not seeing anything yet. Let me know. 4:30 is the actual earnings. The actual earnings like call. 4:03 should be the actual numbers. Now, by the candles, it looks like people already have information. So I'm going to try to find that. Let's see. Nothing just yet. Not that I'm seeing. Google is up. I mean, the stock is moving, ladies and gentlemen. Let's get this straight, okay? The stock is moving. Hold on. There you go. The stock is pumping. Holy. Hi from Denmark. How's it going, guys? How's it going? All right. Let's see if it's actually published on their website. I'm not seeing anything yet for them. Okay, their earnings is actually, or their call is live now, but it's just playing music. Let's see if this guy's got anything. Remember, it is expected for 4:03. Not seeing anything yet. Let's hope. We hope and we pray now, ladies and gentlemen. We hope and we pray. This has been one of my newest positions, both Google and Amazon. I find just, after the last little bit, we're seeing in markets that things can be a little bit more uncertain. The stock is doing great, but I haven't seen anything posted just yet. Let's refresh their actual earnings page. Tanner, more streams like this so Europeans can participate. Okay, earnings are out. Google EPS came in at $2.81, expected $2.02. Okay, they saw $90 billion above that 88.9, and Google Cloud revenue, slight miss, $12.26 billion versus the $12.32 billion expected. That's not going to bode well for NVIDIA. We'll have to see what they actually have to say, but advertising came in much higher than expected. $500 million beat, $66.89 billion versus $66.39 billion expected. Okay. Big beats across the board. Stock is loving it. You might see a retraction right now because of that Google Cloud expectation. That's definitely one that I know that they really wanted to hit hard on. Okay. So that is going to be a slight sting. But overall, the company is doing great. The biggest way that they make income is advertising. If that outperforms, that hits harder than anything else, right? It's not like Google Cloud underperformed by, what is it? 80 million, and advertising outperformed by 500 million. So that's going to be the side that a lot of people focus on, and the margins that are unbelievable because they have essentially an entire monopoly there. And in fact, it's such a monopoly that, they might get some lawsuits, and maybe the company might have to, exit the open internet. We'll have to see. Okay. But they're appealing that right now. We'll have to see. Great numbers from Google. Just really quickly, Intel also is doing quite well. I don't know about the stock. We'll have to see the stock, but yeah, stock not so much. But from what I see here is that their earnings had actually beat by $300 and so million. So revenue beat, and I'm not actually seeing EPS here. This report doesn't actually show their EPS, so that could have been a big miss, and that's maybe why the stock is getting dragged down. We're not a shareholder there. We're a shareholder of Google, ladies and gentlemen. Let's head back to that beautiful chart, up 4.5% in the after hours. Love to see it. If there is a Mag 7 company, Lee Armstrong said Google undervalued. If there is one name that's undervalued in the Mag 7, it's definitely Google. So I can't hate that sort of response whenever you see this. Ladies and gentlemen, we have the earnings slides. Let's switch on over. All right. So I'm just going to read this exactly how I'm seeing it. Same with you, okay? Earnings. Let's go through. Yes, they did end up beating on Q1 of 2025. We can plug those numbers during the call, and then whenever we're done with the call and everything, we'll get back to it, and we can actually see how they did. But diluted EPS of $2.81. That's way above the 202 that we were expecting. So great growth there on their earnings side. Beautiful charts. Love to see this. Year-over-year growth. Operating margins improving. Year-over-year growth on revenue still 12%. Strong. This is just cut off for me. Cost of revenues, yeah, but growing slower than their actual revenue growth, which is expanding the margins. Love that. And then the breakdown of their research, development, sales, and marketing, and general and administrative. Okay, let's see. For YouTube, by the way, let's see how this is broken down. YouTube ads, if I'm getting the colors right here, is up 10% year over year, same as Google search and other, which is so crazy, by the way, because the big bear case, this is what I think is so funny about the Google bear case. It's like ChatGPT is killing them. They have 600 million monthly actives and everything, but people are still showing up to use Google, and the advertising revenue still comes in. So if it's doing well, great, okay? Subscription platforms and devices growing 19% year over year. Love it. Google network continues to shrink. That's been happening over a long period. Google Cloud revenue, 28% year over year growth. Meh. Okay. I know I'm being nitpicky here, but we would love that to be above 30%. We want all the big cloud providers to be that high. Well, aside from AWS, they're not going to be putting up those numbers. They're kind of aiming for the 20%, but Google Cloud wants to be at around that 30%. So last 2 quarters, by the way, if we look at Q3, 34% year over year. Last quarter, 30%. This quarter, 28%. It's good. Operating margins, you can see they're still benefiting greatly, 17.8% versus 9.4% year over year, respectively. Important to keep an eye on, though. Okay? CapEx. This might as well be an NVIDIA chart right here, ladies and gentlemen. Look at this Q1, up 43%, $17.2 billion in capital expenditures. That's their expense for property and equipment, okay? Or Grace Blackwell chips. Who knows? I don't. Who does know these days? So yeah, this is the chart that I'm actually liking the most, because by far, maybe 10x the position size I have in NVIDIA. Maybe even more than that. Definitely more than that. Probably 20x. Yeah. Okay. Free cash flow positive as always for Google. They're doing great, which is so crazy, by the way, because whenever you look at the, obviously they're operating, or cash from operations growing well, but then whenever you tack on this additional CapEx, the fact that free cash flow is still continuously growing, like that is so crazy. Okay, so really, really excited from this. Remember, don't pay too much attention to Q4. These are holiday times. It's all about year over year with cyclical businesses, right? So we want to pay attention to that. Absolutely love this. I think this is what we have for charts. Let me just switch back really quickly, and then we'll get the press release and read what the boys at Google had to say. The Sundar Pichais of the world, eh? Okay, that's not going to work. We'll just do this. Is that big enough? Can we all read that? Is that big enough? Let me know if that needs changing. Okay. So from Google, consolidated Google revenue increased 12% or 14% in constant currency year over year to $90.2 billion, reflecting robust momentum across the business with Google Search and Other, YouTube ads, Google subscriptions, platforms and devices, and Google Cloud, each delivering double-digit growth rates. And people call this value tech. I'm looking at you, Josh Brown. Way to sell out. No, I'm kidding. He's doing his own thing. He's doing great. By the way, stock still holding up 4.4%. That's doing solid as well. Let's switch back. And a sip of water too. By the way, I'm already skipping ahead to the things that I'm really trying to read here. Google Cloud revenue increased 28% to $12.3 billion, led by growth in Google Cloud Platform across core GCP products, AI infrastructure, and generative AI solutions. One of the big deals that they ended up closing, I think it was in this quarter, I can't believe it would be in last quarter, was Salesforce's, was a $2.5 billion deal. That ended up closing, and one of the main things that they ended up saying for why they went with GCP was their AI products, the integration with Gemini, everything like this. By the way, is Gemini in here? We rolled out Gemini 2.5. Yeah, let's see what else we can find. Just the fact that they rolled it out. Yeah, I don't care about that. We knew that. Stock repurchases. Let's stop on this for a second. On April 23rd, 2025, they authorized the company to repurchase up to an additional $70 billion in Class A and Class C shares in a manner deemed in the best interest of the company and its stockholders, taking into account the economic cost and prevailing market conditions. Another 70 billion, just a straight 70, eh? Okay. Now, with that being said, what are we looking for? Is it outstanding shares? How do they cover it on theirs? Number of shares used in diluted earnings per share count on their most recent quarter. We're at, wow. That's crazy. You know, times it by a quick 1,000, but 12.2 rather than, what was it like? Well, year over year, 12.5. Crazy, crazy. Okay, earnings call should be in the next 15 minutes. Other bets shrunk a little bit, 450 million. That also includes some earnings from Waymo as well. I'm interested in seeing what that is or potentially what dropped off to make other bets. Let's see here. Other bets is a combination of multiple operating segments that are not individually material. Revenues from other bets are generally primary from the sales of healthcare-related services and internet services. I mean, maybe I'm overcomplicating how much Waymo makes, but you know, I'd expect that to be growing. What did they do? 200,000 rides per week? Or 250,000 rides per week now? Dividends are paying. Buybacks are coming in. Repaying a lot of back in their debt. I mean, in that degree, whenever you talk about a company that is of this size, growing at double digits across all platforms, to be offering a dividend, a buyback, can you call that value tech? And also, what constitutes tech these days? Does that just mean like, you know, fast growing or whatever? Like, or like every company is a tech company these days. So I just don't like these types of terms. I think that Google is being priced as a value stock, but is still very much in their growth years. not hyper growth. We're not talking about the fastest companies in the world, but yeah. Declared a quarterly dividend, a cash dividend of 21 cents, representing a 5% increase from the previous quarterly dividend of 20 cents. So potentially the start of a dividend growth business, a buyback giant per se. Not quite. You look at like a PayPal or something like that to be a buyback giant, but still doing good things. Let's pass it off to some questions, and then we will go from there. What time is the actual earnings call? It's at 4:30. We got 14 minutes. Okay. Bear case gone. Yeah, I mean, there's definitely a case for that, for sure. There's definitely a case to say that the bear case is being picked apart. $70 billion buyback. Yeah, I mean, they're a big company. They make a lot of money. They make a lot of money. Makes Apple look like Apple's been a sloth, ladies and gentlemen. Like, that's not something new to me. I've been saying that for time. I don't understand why people buy Apple. And I'm not trying to crap on Apple, but at the valuation, it just doesn't make any sense. Okay? Like, here, let me show another thing here. Also, by the way, one of the best companies that I've partnered with recently, FinChat. I don't even think their link is in my description. I got to throw that in there. But they've been great to me. The speed at which they update their earnings is unbelievable. I'm going to check if it's already updated. That would be kind of mind-blowing if it is. But if it is, we'll go through their numbers and just take a quick peek-see. No, it's not updated yet. All right, I'll give them some time. But it'll be updated, if I know them, before their earnings call is done. And then we can take a look at, oh, they're already starting to update it. I see here, they already have, so here, wait, let's take a look. But I'll need to, where is it? Help. How do I get it to this? Share. Okay. Yeah, see, they already have March 2025, so you could see like how Google search and everything stacked up versus their other quarters. Okay. How YouTube's ads stacked up. Now you can see the big drop-offs after Q4, right? Q1 is always lower. So don't let this fool you. It's really important to take a look at the entire trend, right? Not just quarter after Q4. It's always going to look a little weird after that. Okay. Total revenue, you can see that there. Or what's great about FinChat, if you want to add all this together, and then we'll just stack it all. This is how I make all my videos now. All the visuals are so great. And then you could see based on the compounded annual growth rates, which ones are growing the fastest. Okay, so Google Cloud at 34%, that's what we want to hold up on. You know, but search still being at 12.6%, that's super strong, especially considering that's the biggest bear case on this company. That's so silly. But let me go ahead. I'm going to switch back because FinChat is a superstar company, and I actually like my inbox is full of a bunch of these scammy companies wanting me to promote garbage. I promise you guys, I reach out to them and I say, hey, I want to deal with you. Like, I've also done that with like Notion and all, like even non-financial companies. I'm like, I'm using you guys all the time. Like, help me help you. But some don't answer and some do. And whenever they do, I'm happy. But let's go ahead and continue to answer some questions while I pull up this thing here. Do we think tomorrow Google will be up to 170? Yeah, that could be a good question to pull in the chat. Does Google open above 170 a share. Currently today, we closed 161.47, and the stock right now is holding up 2.9% to 166. So it would need to be a run to get to 170. That being said, the earnings calls can be extremely bullish. They can talk about their activity that they're seeing on Gemini, which I think is at like 350 million monthly active users on Gemini's app alone, let alone their integrations with cloud and all their API access. Like, I mean, they could be a super big in this market, and they did turn that around quite quickly. Then you look at things like, I just saw someone say in the chat, what were your thoughts on the Wiz purchase? I cannot wait. And I'm surprised they actually didn't say that in the press release. Maybe I missed that, or we just didn't read it long enough. But like, did they say anything about Wiz? Let me search that. That's crazy. Wiz is not in the earnings or in the press release. I'm going to knock somebody. What's all that about? Either way, I'm a big fan of it. It goes to show you just how freaking important, cloud security is, or just cybersecurity in general. There are some things in the deal. I think that they wanted the deal so bad that they kind of buckled on some things that I wasn't so proud of or happy with. Like, for example, they talked about, what was it? Like, it's multi-cloud. Obviously, that is a great ad, but then they're not going to be separated. Like, it's still going to be called Wiz. It's not going to be called Google. So I think they're making the company like very independent, almost like the way that Microsoft bought LinkedIn. Not even a lot of people even know that Microsoft was bought by LinkedIn. Here, really quickly, because Google's doing something great here that I'm loving. They're just showing off some product for the thing. And then honestly, what we'll do, I will throw this on. And then we can just keep an eye on the stock and keep an eye on their little video here, and boom. Look at that, eh? StreamYard, what do you got on me? Okay, we got the chat. We've got the stock. It's very small. I could make it much bigger. We're not being annoyed by, the price or the sound or whatever. We're enjoying. All right. What time is the conference? 4:30. This is just a pre. They're just going through all the different products that they have. The Pixel, the Gemini, or like, all these different solutions and how they all work together. Which, like, legitimately, if you guys want to talk about Google's strength, just look at what they're doing. They are OpenAI, the company that wants to triple this year and then 10x by 2029. They want a 30x from here, okay, by 2029. They said that they would be open to buying Google Chrome, okay? They said that they wanted to start a social media platform. They said that they wanted to start an OpenAI cell phone, like get into hardware. They want to do everything that Google is already doing. Do you understand? Like, that just goes to show you all the strengths that Google has and that people are discounting so much right now. Okay? Oh, I know why I was looking at FinChat. The whole reason why I brought up FinChat was to look at the valuations of the Mag 7. Google is by far like the cheapest out of the Mag 7 if you look at them from a price to earnings, forward earnings, all these things. Not from a PEG ratio. If you go out far enough, NVIDIA is by far the cheapest. And yes, Google did just turn 20. 20 years old today, I think. It's today or yesterday. Time is flying for me lately. Google should be a $3 trillion company, in my opinion. I mean, the mode is definitely there. We'd like to see the growth rates be a little bit faster, in my opinion, if you're going to put a 3 stamp on them, but they definitely need to be higher than where they are today. You know? So, okay, let's close out this. Let's see what the poll ended at there. 65% of you said yes to Google closing above 170. 65%. Seems high. Seems high to me. That being said, let's go ahead and take a look at what percentage of you guys own Google stock. Do you own shares of GOOG? Let's see here. GOOG or GOOG-L. Okay. Whether you own Class A or C, I don't care. Let me know down in the chat bar thing or on the side, wherever, if you're on your phone or on the computer. Let me know if you actually own Google or if you're just watching because you haven't seen me live in a real while. What happened to Bing? Dude, I'm literally on Bing right now, which is hilarious. I'm literally using Bing. Grok is better than Google. Nice. I like that. It's easy to click the AI button, as my coworker calls it, in Google Sheets and ask a question about the data. Create a chart with the data or have it create a macro button. I have not found that to be the case. I want AI to be really good in the charts. I haven't found it to be good just yet. Maybe that changes. Remember that whenever you're also betting on Google, I find one of the interesting things that you don't want to fall behind in future products, right? So this is a little bit jarring. I actually falling out of love with the sharing this screen. Tell me if you guys want it back. If you guys want to look at my face or that extremely fast video, I'm happy to have the video on. But yeah. Great start for the Mag 7. Ladies and gentlemen, I have not switched my tone on being bullish. This is why we buy and hold great companies for the long term, because whenever the macro gets uncertain, the only thing that it's offering you is a position to buy more. And your opportunity to sell is whenever people get over enthusiastic, okay? Or when you need the money. I think Waymo will be a major W for Google. Yeah, I know. I heard that they wanted to sell it or something like this. Like, it was like, no, keep it, enjoy it. That's going to be great forever. Like, that's going to be such a great long-term play for them. And they're even using the data from the cameras to help train their models, by the way. That was another thing that people found in the terms and services. Does the video show stonks go up? The video does, if I do it like this, the top corner is showing Google stock slightly starting to turn green once again. Overall, though, I can also make it much bigger. Oh, ladies and gentlemen, buybacks. They announced a buyback thing.
Welcome, everyone.
Okay, earnings call is here.
Thank you for standing by for the Alphabet first quarter.
I'll adjust the audio to make it not too loud.
Are in a listen-only mode. After the speaker presentation, there will be a question and answer session. To ask a question during the session, you will need to press star 1 on your telephone. I would now like to hand the conference over to your speaker today, Jim Friedland, Senior Director of Investor Relations. Please go ahead.
Thank you. Good afternoon, everyone, and welcome to Alphabet's first quarter 2025 earnings conference call. With us today are Sundar Pichai, Philip Schindler, and Anat Ashkenazi. Now, I'll quickly cover the safe harbor. Some of the statements that we make today regarding our business, operations, and financial performance may be considered forward-looking. Such statements are based on current expectations and assumptions that are subject to a number of risks and uncertainties. Actual results could differ materially. Please refer to our Forms 10-K and 10-Q, including the risk factors. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and non-GAAP financial measures. A reconciliation of non-GAAP to GAAP measures is included in today's earnings press release, which is distributed and available to the public through our investor relations website located at abc.xyz/investor. Our comments will be on year-over-year comparisons unless we state otherwise. And now, I'll turn the call over to Sundar.
Thanks, Jim. Good afternoon, everyone. We are pleased with our strong results this quarter. We continue to see healthy growth and momentum across the business, including AI powering new features. In Search, we saw continued double-digit revenue growth. AI Overviews is going very well with over 1.5 billion users per month, and we are excited by the early positive reaction to AI Mode. There's a lot more to come ahead. In subscriptions, we surpassed 270 million subscriptions with YouTube and Google One as key drivers. And cloud grew rapidly with significant demand for our solutions, and you saw our leadership in AI at Cloud Next across infrastructure, agents, and more. Our differentiated full-stack approach to AI continues to be central to our growth. This quarter was super exciting as we rolled out Gemini 2.5, our most intelligent AI model, which is achieving breakthroughs in performance, and it's widely recognized as the best model in the industry. That's an extraordinary foundation for our future innovation, and we are focused on bringing this to people and customers everywhere. Looking ahead to I/O, Brandcast, and Google Marketing Live, I can't wait for our teams to showcase the innovations they've been working on. Turning to our AI progress this quarter, which continues to enable significant growth opportunities. The elements of the AI stack I've previously mentioned are AI infrastructure, world-class research, including models and tooling, and our products and platforms. Starting with AI infrastructure, our long-term investments in our global network have positioned us well. Google's network is robust and resilient, supported by over 2 million miles of fiber and 33 subsea cables. Complementing this, we offer the industry's widest range of TPUs and GPUs and continue to invest in next-generation capabilities. Ironwood, our 7th-generation TPU and most powerful to date, is the first designed specifically for inference at scale. It delivers more than 10x improvement in compute power over a recent high-performance TPU, while being nearly twice as power efficient. A strong relationship with NVIDIA continues to be a key advantage for us and our customers. We were the first cloud provider to offer NVIDIA's groundbreaking B200 and GB200 Blackwell GPUs, and will be offering their next-generation Vera Rubin GPUs. Second, this infrastructure powers our world-class research, including our industry-leading models. We released Gemini 2.5 Pro last month, receiving extremely positive feedback from both developers and consumers. 2.5 Pro is state-of-the-art on a wide range of benchmarks and debuted at #1 on the chatbot arena by a significant margin. 2.5 Pro achieved big leaps in reasoning, coding, science, and math capabilities, opening up new possibilities for developers and customers. Active users in AI Studio and Gemini API have grown over 200% since the beginning of the year. And last week, we introduced 2.5 Flash, which enables developers to optimize quality and cost. Our latest image and video generation models, Imagen 3 and Veo 2, are rolling out broadly and are powering incredible creativity. Turning to open models, we launched Gemma 3 last month, delivering state-of-the-art performance for its size. Gemma models have been downloaded more than 140 million times. Lastly, we are developing AI models in new areas where there's enormous opportunity. For example, our new Gemini robotics models. And in health, we launched AI Co-Scientist, a multi-agent AI research system, while AlphaFold has now been used by over 2.5 million researchers. Third, turning to products and platforms. All 15 of our products with 500 million users now use Gemini models. Android and Pixel are two examples of how we are putting the best AI in people's hands, making it super easy to use AI for a wide range of tasks. just by using their camera, voice, or taking a screenshot. We are upgrading Google Assistant on mobile devices to Gemini, and later this year, we'll upgrade tablets, cars, and devices that connect to your phone, such as headphones and watches. The Pixel 9a launched to very strong reviews, providing the best of Google's AI offerings like Gemini Live and AI-powered camera features. And Gemini Live camera and screen sharing is now rolling out to all Android devices, including Pixel and Samsung S25. Now moving on to key highlights from across Search, Cloud, YouTube, and Waymo. First, Search. AI is one of the most revolutionary technologies for enabling and expanding our information mission. And for Search, we see it growing the number and types of questions we can answer. We are already seeing this with AI Overviews, which now has more than 1.5 billion users every month. Nearly a year after we launched AI Overviews in the US, we continue to see that usage growth is increasing as people learn that search is more useful for more of their queries. So we are leaning in heavily here, continuing to roll the feature out in new countries to more users and to more queries. Building on the positive feedback for AI Overviews, in March we released AI Mode, an experiment in labs. It expands what AI Overviews can do with more advanced reasoning, thinking, and multimodal capabilities to help with questions that need further exploration and comparisons. On average, AI Mode queries are twice as long as traditional search queries. We're getting really positive feedback from early users about its design, fast response time, and ability to understand complex, nuanced questions. We also continue to see significant growth in multimodal queries. Circle to Search is now available on more than 250 million devices, with usage increasing nearly 40% this quarter. And monthly visual searches with Lens have increased by 5 billion since October. Moving on to Cloud. At Cloud Next, we announced major innovations, and over 500 companies shared the business results they are achieving by working with us. We provide leading cost, performance, and reliability for AI training and inference. This enables us to deliver the best value for AI leaders, like Anyscale and contextual AI, as well as global brands like Verizon. And for highly sensitive data and regulatory requirements, Google Distributed Cloud and our Sovereign AI make Gemini available on premises or in country. Our Vertex AI platform makes over 200 foundation models available, helping customers like Lowe's integrate AI. We offer industry-leading models, including Gemini 2.5 Pro, 2.5 Flash, Imagen 3, Veo 2, Chirp, and Lyria, plus open source and third-party models like Llama 4 and Anthropic. We are the leading cloud solution for companies looking to the new era of AI agents, a big opportunity. Our Agent Development Kit is a new open source framework to simplify the process of building sophisticated AI agents and multi-agent systems. And Agent Designer is a low-code tool to build AI agents and automate tasks in over 100 enterprise applications and systems. We are putting AI agents in the hands of employees at major global companies like KPMG. With Google Agent Space, employees can find and synthesize information from within their organization, converse with AI agents, and take action with their enterprise applications. It combines enterprise search, conversational AI or chat, and access to Gemini and third-party agents. We also offer prepackaged agents across customer engagement, coding, creativity, and more that are helping to provide conversational customer experiences, accelerate software development, and improve decision-making. And of course, Google Workspace. It delivers more than 2 billion AI assists monthly, including summarizing Gmail and refining docs. Lastly, our cybersecurity products are helping organizations detect, investigate, and respond to cybersecurity threats. Our expertise, coupled with integrated Gemini AI advances, detects malware, prioritizes threats, and speeds up investigative workflows. This quarter, we were excited to announce our intent to acquire Wiz, a leading cloud security platform that protects all major clouds and code environments. Together, we can make it easier and faster for organizations of all types and sizes to protect themselves, end-to-end and across all major clouds. We think this will help spur more multi-cloud computing, something customers want. Next, YouTube. Yesterday marked a historic milestone, the 20th anniversary of the first video uploaded to YouTube. From that single 19-second upload, the platform has grown into a global phenomenon, fundamentally changing how billions of people create, share, and experience content. Through all this growth, subscriptions are now a big part of the business. We continue to diversify subscription options, recently expanding our Premium Lite pilot to the US, giving users a new way to enjoy most videos on YouTube ad-free. TV is the primary device for YouTube viewing in the US. According to Nielsen, YouTube has been #1 in streaming watch time in the US for the last 2 years. And YouTube now has over 1 billion monthly active podcast users. YouTube Music and Premium reached over 125 million subscribers, including trials globally. And finally, Waymo is now safely serving over 250,000 paid passenger trips each week. That's up 5x from a year ago. This past quarter, Waymo opened up paid service in Silicon Valley. Through our partnership with Uber, we expanded in Austin and are preparing for our public launch in Atlanta later this summer. We recently announced Washington, D.C. as a future ride-hailing city, going live in 2026 alongside Miami. Waymo continues progressing on 2 important capabilities for riders, airport access and freeway driving. Thanks to all of our employees for their work this quarter. It was a great start to the year, and Q2 will be even more exciting. With that, Philip, over to you.
Thanks, Sundar, and hello, everyone. I'll quickly cover performance for the quarter and then frame the rest of my remarks around the progress we're delivering across search, ads, YouTube, and partnerships. Google's services revenues were $77 billion for the quarter, up 10% year on year, driven by strong growth in search and YouTube, partially offset by a year-on-year decline in network revenues. To add some further color to the performance, the 10% increase in search and other revenues was led by financial services, primarily due to strength in insurance, followed by retail. YouTube saw a similar performance across verticals. Its 10% growth in advertising revenues was driven by direct response, followed by brand. So let's start with search, where we've seen robust growth in revenues. All around the world, over 2 billion people use search every day to find information, compare products, or shop. And there are more than 5 trillion searches on Google annually. We've continued our efforts to help more people ask entirely new questions, bringing more opportunities for businesses to connect with consumers. And as we've mentioned before, with the launch of AI overviews, the volume of commercial queries has increased. Q1 marked our largest expansion to date for AI overviews, both in terms of launching to new users and providing responses for more questions. The feature is now available in more than 15 languages across 140 countries. For AI overviews overall, we continue to see monetization at approximately the same rate, which gives us a strong base on which we can innovate even more. Turning to visual queries. On the last earnings call, I mentioned the success we're seeing with Lens, where shoppers use their camera or images to quickly find information in ways they couldn't before. In Q1, the number of people shopping on Lens grew by over 10%, and the majority of Lens queries are incremental. Sundar mentioned the significant growth we're also seeing with Circle to Search, as multimodality continues to drive queries across search. Moving to ads. More businesses, big and small, are adopting AI-powered campaigns, and the deployment of AI across our ads business is driving results for our customers and for our business. Throughout 2024, we launched several features that leverage LLMs to enhance advertiser value, and we're seeing this work pay off. The combination of these launches now allows us to match ads to more relevant search queries, and this helps advertisers reach customers in searches where we would not previously have shown their ads. Focusing on our customers, we continue to solve advertisers' pain points and find opportunities to help them create, distribute, and measure more performant ads, infusing AI at every step of the marketing process. On Audience Insights, we released new asset audience recommendations, which tell businesses the themes that resonate most with their top audiences. On creatives, advertisers can now generate a broader variety of lifestyle imagery customized to their business to better engage their customers and use them across PMax, demand gen, display, and app campaigns. Additionally, in PMax, advertisers can automatically source images from their landing pages and crop them, increasing the variety of their assets. On media buying, advertisers continue to see how AI-powered campaigns help them find new customers. In demand gen, advertisers can more precisely manage ad placements across YouTube, Gmail, Discover, and Google Display Network globally, and understand which assets work best at a channel level. Thanks to dozens of AI-powered improvements launched in 2024, businesses using demand gen now see an average 26% year-on-year increase in conversions per dollar spent for goals like purchases and leads. And when using demand gen with product feed, on average, they see more than double the conversion per dollar spent year over year. As an example, Royal Canin combined demand gen and PMax campaigns to find more customers for its cat and dog food products. The integration resulted in a 2.7 times higher conversion rate, a 70% lower cost per acquisition for purchasers, and increased the value per user by 8%. Turning to YouTube, where we saw strong growth in revenues across ads and subscriptions. This week, we're celebrating YouTube's 20th anniversary. We're proud of its leadership as a streaming destination where people come to watch everything they love, from live sports and creator-produced content to shorts and podcasts. Creators are what drives viewership, and on average, they upload 20 million videos a day to YouTube. Our biggest creators generate a level of fandom and viewer engagement around large cultural moments on YouTube that brands can't find anywhere else. During March Madness, brands aligned not only with clips and highlights from the game, but also with the creators who drive basketball culture, like Jesser and The Ringer's J. Kyle Mann. In Q1, the growth of our reservation-based ads business more than doubled year over year. Brands and creators continue to use the opportunities that collaborations and partnerships offer. Toyota worked with Zach King, the king of short magical videos with over 42 million followers, to take over his channel. The creator takeover and accompanying creator ad lifted Toyota's brand awareness by 25% compared to a control group and 9% compared to the Toyota brand ad. Looking at shorts, engaged views grew by over 20% in the first quarter. We continue to be pleased with the progress we're making globally in shorts monetization relative to in-stream viewing, and are particularly encouraged by the trend in the US. As always, I'll wrap up with the strong momentum we're seeing in partnerships, where customers increasingly recognize the strength and breadth of what Google has to offer. For instance, Roblox is partnering with Google Ad Manager to bring immersive ads to gamers. Gen Z gamers are Roblox's biggest users, and thanks to our partnership, advertisers will be able to reach this audience with ads that blend seamlessly into the gaming experience. We also launched a YouTube Shorts effect to help people release iconic Roblox heads and inspire fans to create content at scale. In closing, I'd like to thank Googlers everywhere for their contributions and commitment to our success, and to our customers and partners for their continued trust. Anat, over to you.
Thank you, Philip. My comments will focus on year-over-year comparisons for the first quarter, unless I state otherwise. I will start with results at the Alphabet level, and will then cover our segment results. I'll end with some commentary on our outlook for the second quarter and 2025. We had another strong quarter in Q1. Consolidated revenues of $90.2 billion increased by 12%, or 14% in constant currency. Search and YouTube advertising, subscription platforms and devices, and Google Cloud each had double-digit revenue growth this quarter, reflecting strong momentum across the business. Total cost of revenue was $36.4 billion, up 8%. Tech was $13.7 billion, up 6%. We continue to see a revenue mix shift with Google Search growth at double-digit levels, while network revenues, which have much higher tech rate, declined. Other costs of revenue was $22.6 billion, up 9%, with the increase primarily driven by content acquisition costs, largely for YouTube, followed by depreciation and other technical infrastructure operations costs. Total operating expenses increased 9% to $23.3 billion. R&D investments increased by 14%, primarily driven by increases in compensation and depreciation expenses. Sales and marketing expenses decreased 4%, primarily reflecting a decline in compensation expenses. G&A expenses increased by 17%, reflecting the impact of charges for legal and other matters. Operating income increased 20% this quarter to $31 billion, and operating margin increased to 33.9%, representing 2.3 points of margin expansion. Operating margin benefited from healthy revenue growth, a moderated pace of compensation growth, and a favorable mix shift towards lower tech advertising revenues, partially offset by a year-on-year increase in depreciation expenses of just over $1 billion. Other income and expenses was $11.2 billion, primarily due to unrealized gain on our non-marketable equity securities related to our investment in a private company, which we noted on our 10-K as a subsequent event. Net income increased 46% to $34.5 billion, and earnings per share increased 49% to $2.81. We delivered free cash flow of $19 billion in the first quarter and $74.9 billion for the trailing 12 months. We ended the quarter with $95 billion in cash and marketable securities. Turning to segment results, Google Services revenues increased 10% to $77.3 billion, reflecting strength in Google Search and YouTube advertising as subscription. Google Search and other advertising revenues increased by 10% to $50.7 billion. The robust performance of Search was once again broad-based across verticals, led by financial services due primarily to strength in insurance, followed by retail. YouTube advertising revenues increased 10% to $8.9 billion, driven by direct response advertising, followed by brand. Network advertising of $7.3 billion were down 2%. Subscription platforms and device revenues increased 19% to $10.4 billion, primarily reflecting growth in subscription revenues. This growth was primarily driven by YouTube subscription offerings, followed by Google One, with growth in the number of subscribers being the biggest driver of revenue growth. Google Services operating income increased 17% to $32.7 billion, and operating margin increased from 39.6% to 42.3%. Turning to the Google Cloud segment, which continued to deliver very strong results this quarter. Revenue increased by 28% to $12.3 billion in the first quarter, reflecting growth in GCP across core and AI products at a rate that was much higher than Cloud's overall revenue growth rate. Growth in Google Workspace was primarily driven by an increase in average revenue per seat. Google Cloud operating income increased to $2.2 billion, and operating margin increased from 9.4% to 17.8%. As we scale our fleet, we continue to focus on driving improvements in productivity, efficiency, and utilization to offset the growth in expenses, particularly from higher depreciation. As to our other bets, for the first quarter, revenues were $450 million, and operating loss was $1.2 billion. The year-on-year decline in revenue and increase in operating loss primarily reflect a milestone payment received in the first quarter of 2024 for one of our other bets. With respect to CapEx, our reported CapEx in the first quarter was $17.2 billion, primarily reflecting investment in our technical infrastructure, with the largest component being investment in servers, followed by data centers, to support the growth of our business across Google Services, Google Cloud, and Google DeepMind. In Q1, we returned value to shareholders in the form of $15.1 billion in share repurchases and $2.4 billion in dividend payments. As we announced today, our board of directors declared a 5% increase in our quarterly dividend and also approved a new $70 billion share repurchase authorization. Turning to our outlook, I would like to provide some commentary on several factors that will impact our business performance in the second quarter and the remainder of 2025. First, in terms of revenue, I'll highlight a couple of items that we mentioned last quarter that will have an impact on second quarter and 2025 revenue. First, in Google Services, advertising revenue in 2025 will be impacted by lapping the strength we experienced in the financial service vertical throughout 2024. Second, in Cloud, we're in a tight demand-supply environment, and given that revenues are correlated with the timing of deployment of new capacity, we could see variability in Cloud revenue growth rates depending on capacity deployment each quarter. We expect relatively higher capacity deployment towards the end of 2025. Moving to investments, starting with our expectation for CapEx for the full year 2025. We still expect to invest approximately $75 billion in CapEx this year. The expected CapEx investment level may fluctuate from quarter to quarter due to the impact of changes in the timing of deliveries and construction schedules. In terms of expenses, first, as I mentioned on our previous earnings call, the significant increase in our investments in CapEx over the past few years will continue to put pressure on the P&L, primarily in the form of higher depreciation. In the first quarter, we saw 31% year-on-year growth in depreciation from the increase in technical infrastructure assets placed in service. Given the increase in CapEx investments over the past few years, we expect the growth rate in depreciation to accelerate throughout 2025. Second, as we've previously said, we expect some headcount growth in 2025 in key investment area. As we've disclosed previously, due to a shift in the timing of our annual employee stock-based compensation award beginning in 2023, our first quarter stock-based comp expenses is relatively lower compared to the remaining quarters of the year. In conclusion, as you heard from Sundar and Philip, we're pleased with the progress we're making across the organization, the results for the quarter, and the opportunities ahead. Our success as a company is grounded in our experience driving advancements in deep computer science that enables us to create innovative new products and services for users, businesses, and partners around the world. We have a strong track record of incubating and then building these offerings into new, profitable businesses for Alphabet. As we announced last quarter, YouTube and Cloud exited 2024 at a combined annual run rate of $110 billion. And as you heard from Sundar earlier, Waymo is continuing to progress in building on its impressive technological achievements to scale rapidly and develop a sustainable business model. Thank you. Sundar, Philip, and I will now take your questions.
Thank you. As a reminder, to ask a question, you will need to press star 1 on your telephone. To prevent any background noise, we ask that you please mute your line once your question has been stated. And our first question comes from Brian Nowak from Morgan Stanley. Your line is now open.
Great. Thanks for taking my questions. I have two. The first one is sort of the macro advertising backdrop. Maybe Anat, I know it's April 24th, and you call out some factors as you're kind of thinking about the second quarter. Any other factors you're seeing in advertising verticals or regions or categories that could be showing any signs of weakness quarter to date? So we should think through any other changes from typical seasonality in 2Q25 versus prior quarters. Then the second one, on Philip, I think I heard you mention how the volume of commercial queries has increased. Maybe can you just walk us through which of the products are driving that increase in commercial queries? And as you sort of think about the pipeline of search products, are there any others that you're particularly excited about to kind of continue to drive further commercial query growth throughout 25, 26? Thanks.
So let me take the first one as well. We saw broad-based strength across ad verticals in Q1, and we saw it give you a bit of vertical color here. Search was led again by finance, due primarily to ongoing strength in the insurance, retail, healthcare, and travel were actually also sizable contributors here to growth. With regard to Q2, we're only a few weeks in, so it's really too early to comment. I mean, we're obviously not immune to the macro environment, but we wouldn't want to speculate about potential impacts beyond noting that the changes to the de minimis exemption will obviously cause a slight headwind to our ads business in 2025, primarily from APAC-based retailers. And maybe to zoom out, I would say we have a lot of experience in managing through uncertain times, and we focus on helping our customers by providing deep insights into changing consumer behavior that is relevant to their business. Examples are auction dynamics, query trend insights on topics like replacement purchases, and so on. So we have a lot of experience in this area. On the commercial query side, look, AI overviews continue to drive higher satisfaction and search usage. And as I noticed, Q1 was really our largest expansion to date for AI overviews, both in terms of launching to new users and providing responses for more questions. And that's really the core already of the answer. AI overview sits at the center of your question here. And when it comes to other products, look, I don't want to speculate on this, but we're happy with what we're seeing here on AI overviews, and I'm confident we can expand this to more products over time.
Thank you. Your next question is from Doug Anmuth from JP Morgan. Your line is now open.
Great. Thanks for taking the questions. Phil, maybe just to go back to AI overviews for a moment, could you just tell us how we should think about the 1.5 billion AI overviews users just in terms of breadth of rollout? And I know you're saying monetization at approximately the same rate, but what does that mean in terms of click-through rates and conversion? And then, Anat, just curious if there have been any changes to Google's approach to durably re-engineering the cost base since you've joined, and if macro weakens and we see more of a slowdown, would you expect to find additional opportunities to cut back more on costs? Thank you.
Yeah, look, on the ads in AI overviews, late last year, actually, we launched them within the AI overviews on mobile in the US, and this builds on our previous rollout of ads above and below. So this was a change we have. But as I talked about it before, for AI overviews overall, we see the monetization at approximately the same rate, which gives us a strong base on which we can innovate even more. So I'm very happy with this. I don't think this is the moment to go into the details of click-through rates and conversion and so on. But overall, we're happy with what we're seeing.
And to your question on our approach to productivity and efficiency, it hasn't really changed. I've mentioned my approach and our approach as a company at the end of 2024, and we're still focused on driving efficiency and productivity throughout the organization, both in our operating expenses and in our CapEx. I've mentioned some of these during my prepared remarks. But certainly this helps us as we think about the investments we need to make in innovation to drive long-term sustainable growth profile for the company. We're able to repurpose some of these efficiencies into these investments, as well as you think about the increase in CapEx we've seen over the past several years and what we're investing this year. This will put additional pressure on the income statement in the form of depreciation. So we're working hard to try and offset some of the headwinds, as well as within the CapEx investments themselves, $75 billion. We're looking at how do we make sure every dollar is used efficiently. We have a highly rigorous process to determine the demand behind it and then the allocation of the compute associated with our technical infrastructure investments, ensuring that we're utilizing that appropriately and that we're highly efficient with everything we're doing. You've seen some of the announcement and some of the changes, but we're focusing on continuing to moderate the pace of compensation growth, looking at our real estate footprint, and again, the build out and utilization of our technical infrastructure across the business.
Great. Thank you both.
Thank you. Our next question comes from Eric Sheridan from Goldman Sachs. Your line is now open.
Thank you for taking the questions. First, maybe for Sundar, when you look across the consumer AI landscape today, how are you thinking about continuing to drive differentiation for Gemini as a platform through the lens of usage, utility, or putting product innovation at the forefront of driving consumer habits? And then the second one, maybe for Anat, if the macro environment were to change and become more downwardly volatile, how should investors think about the investments that are must make this year, or almost fixed in nature, versus where there might be more flexibility to alter the investment priorities of the company if the macro environment were to worsen? Thank you so much.
Thanks, Eric. Obviously, it's an exciting moment on the AI front. I think the foundation for everything is obviously the frontier model progress we are seeing, and particularly with 2.5 Pro and Flash, I think we're well positioned. We are seeing tremendous reception from developers, enterprises, and consumers too. And obviously, we are delivering consumer AI experiences across our product portfolio, including the primary way people experience it is obviously in search with AI overviews, and very early days with AI mode, but that will be a consumer AI forward experience. And we're already seeing very positive feedback. Queries are, people are typing in roughly 2x longer queries compared to traditional search. So there's a lot of excitement there. And in the Gemini app, which you asked about, we've really seen increased momentum, particularly over the last few weeks as we've rolled out not just the newer models, but we are seeing users are really responding well to all the innovation. Gemini Live, which is based on Project Astra, has been very well received. Deep research, I think, based on 2.5 Pro is SOTA, and that's been well received. And Canvas, we've had a lot of traction as well. And so we are definitely investing more. We have recently organized ourselves better to capitalize on this momentum, and I'm excited about our roadmap there.
And on the investments this year and overall, should there be any macroeconomics changes, as I said, we're still planning to invest approximately $75 billion in CapEx this year. We do see a tremendous opportunity ahead of us across the organization, whether it's to support Google Services, Google Cloud, and Google DeepMind. Recall I've stated on the Q4 call that we exited the year in cloud specifically with more customer demand than we had capacity. And that was the case this quarter as well. So we want to make sure we ramp up to support customer needs and customer demands. Having said that, we're investing in long-term and we're investing in innovation. That's the essence of our business. And we want to do it in a responsible fashion. So you've seen us over the past couple years, and we're continuing to do this, and you're seeing this in our results, drive efficiency and productivity throughout the business. And we've announced things such as consolidation of teams, which helps not just with cost, but with velocity and speed. We're able to get things to market faster. So that's one of the areas we're focused on. You heard from Sundar the last couple of calls on just the rapid pace of innovation we're bringing to the marketplace. So the way we're doing this across the business to drive productivity and efficiency should help us have a more resilient organization irrespective of macroeconomic condition. But certainly, we don't ignore that. We always look at what's happening outside the organization as well as inside, but invest appropriately to drive both the short-term growth as well as the long-term growth.
Thank you.
Thank you. Our next question comes from Ross Sandler from Barclays. Your line is now open.
Great, thanks. One for Sundar, one for Philip. Sundar, it was disclosed this week in the trial that's going on that Gemini has 35 million DAUs, and just curious, that number obviously trails ChatGPT by a pretty wide margin. Could you just talk about the strategy to get that DAU figure much higher that you guys are deploying? And then Philip, just curious to hear what you're seeing on the brand advertising side at YouTube in 1Q and into early 2Q. Are brands holding up relatively well, like direct response, or are they starting to react to some of these macro jitters that we're all experiencing? Any thoughts there? Thank you very much.
Thanks, Ross. I think I touched upon this to Eric's question as well, but we are definitely, I think, there's been a lot of momentum in terms of product features we've been introducing, and we are definitely seeing reception, including increased adoption and usage based on those features. So I think we are in a good positive cycle. The recent advances on the model frontier, by many metrics, I think we have the best model out there now, and I think that's going to drive increased adoption as well. And again, I would reiterate, people are using. Obviously, we have 1.5 billion users through AI overviews interacting with AI in a deep way, in a very engaged way. Obviously, we are innovating with AI mode. And we have a very exciting roadmap ahead with the Gemini app as well. So across the board, super excited about what's ahead.
And on your brand question, look, brand and, by the way, also direct response had a very solid growth in Q1. Brand advertisers really enjoyed cultural moments we had, like Coachella, for example, or March Madness. We had strong contributions overall from the finance and retail verticals in Q1 on this side as well. The operating metrics for YouTube were strong in Q1. Watch time growth remains robust, particularly in key monetization opportunity areas such as Shorts and Living Room. It's also, by the way, nice to see the strong position of our creators who obviously benefit from the brand piece, which gives us a lot of confidence when we look at it more closely. And on the Q2 side, I think I mentioned it's too early to really comment on that.
Thank you. Your next question is from Mark Smolik from Bernstein. Your line is now open.
Great. Thanks for taking my questions. Sundar, appreciate the color on Gemini deployment across kind of the 15 products with 500 million users or more. It would be great to hear more about where you're seeing the most usage and deployment of Gen AI internally at Google. Perhaps whether the capabilities, are they in a place today in terms of either supplementing or augmenting the workforce? And then just to build on that earlier AI mode type questions, appreciate AI mode has 2x longer queries than traditional search. But any color you can share perhaps on how AI mode behavior differs from how consumers are using the Gemini app? Thank you.
Look, on internally, I mean, this has been extraordinary amount of focus and excitement, both because I think we are the early use cases have been transformative in nature, and I think this still feels like early days and long ways to go. Obviously, I mentioned a few months ago, in terms of how we are using AI for coding, we are continuing to make a lot of progress there in terms of people using coding suggestions. I think the last time I had said the number was like 25% of code that's checked in. It involves people accepting AI suggested solutions. That number is well over 30% now. But more importantly, we have deployed more deeper flows. And particularly with the newer models, I think we are working on early agentic workflows and how we can get those coding experiences to be much deeper. We are deploying it across all parts of the company. Our customer service teams are deeply leading the way there. We've both dramatically enhanced our user experience as well as made it much more efficient to do so. And we are actually bringing all our learnings and expertise in our solutions through cloud to our other customers. But beyond that, all the way from the finance team preparing for this earnings call to everything, it's deeply embedded in everything we do. But I still see it as early days, and there's going to be a lot more to do. On AI mode, look, I think we are just leaning in on the early positive feedback. As we scaled up AI overviews, it's been one of our most positive launches. But it's been clear people have wanted even more of it. And so, with AI mode, we are bringing our state-of-the-art Gemini models right into search. And I mentioned people typing in longer queries. There's a lot more complex, nuanced questions. People are following through more. People are appreciating the clean design, the fast response time, and the fact that they can kind of be much more open-ended, can undertake more complicated tasks. Product comparisons, for example, has been a positive one, exploring how-tos, planning a trip. So those are the kinds of early feedback we are seeing. And, I think we are obviously really focused on improving the product across all of AI mode, AI overviews, and the Gemini app. And we are seeing positive user traction as well.
Thank you. Your next question is from Mark Mahaney from Evercore. Your line is now open.
Okay, thanks. One for Anat and one for Sundar. Anat, getting back to a question I think that Doug was asking earlier on, you just put up record high or multi-year record high margins for both Google Services and for Google Cloud. You talked, Phil, about depreciation expenses accelerating rapidly throughout the year because of all the investments you've already you'd warn people about. Back in the September quarter, you seem relatively confident that you had enough levers to kind of offset, kind of rising infrastructure costs. Was that still your, 6 months later, is that still your view that you've got enough levers that even with the rising infrastructure costs, there's enough in there to kind of counterbalance that? And then just briefly on Waymo, that continues to rise aggressively, the numbers, Sundar. The long-term business model for Waymo, is there a reason to make a decision on that soon, or have you already made a decision of whether this is a long-term licensing model, or you really want to run this as a standalone ride-sharing delivery, autonomous vehicle business? Thank you very much.
Thanks. So on your first question on profitability and what levers do we have, and do we still have levers to pull? First, I think every organization can always push a little further. I don't view productivity goals or efficiency as an episodic kind of project-based effort, but rather a continuous effort that when you get to a certain place, you push a little further. Having said that, we do have significant investments we're making across the organization, and we have been making them for the past several quarters. And we've been able to do it because we were able to find efficiency to fund those investments across the organization. And those are for products and services that are going to drive long-term growth for the company. So while we're trying to offset as much of the headwind associated with the increase in infrastructure costs, it will become more difficult. As I said, the depreciation will accelerate. We had about a 31% year-over-year growth in depreciation this quarter, and it will be higher as we go throughout the year. So think about that kind of as a headwind that we have to manage against. But we're continuing with pushing across the organization, leveraging, Sundar mentioned the use of AI and kind of an AI-first Google across several of our functions to help us manage a larger scope of work using our AI agents and AI tools. As Sundar mentioned, we did leverage it in preparation for the earnings call, and we're leveraging across several functions. So there are opportunities, but there are also great opportunities for investment, and we want to make sure that we make room to make these investments to drive long-term growth and ensure we have a very resilient long-term growth profile for the company.
And Mark, thanks. I think this is probably the first question I've got on an earnings call on Waymo, so thank you, and I think it's a sign of its progress. Look, the thing that excites me is I think we've been laser focused and will continue to be on building the world's best driver, and I think doing that well, really gives you a variety of optionality in business models across geographies, etc. It'll also require a successful ecosystem of partners, and we can't possibly do it all ourselves. And so I'm excited about the progress the teams have made through a variety of partnerships. Obviously, a highlight of it is a partnership with Uber. We are very pleased with what we are already seeing in Austin in terms of rider satisfaction. We look forward to offering the first paid rides in Atlanta via Uber later this year. But we are also building up a network of partners, for example, for maintaining fleets of vehicles and doing all the operations related to that, with the recently announced partnership with Move in Phoenix and Miami, obviously partnerships with OEMs. There are future optionality around personal ownership as well. So we are widely exploring, but at the same time, clearly staying focused and making progress, both in terms of safety, the driver experience, and progress on the business model and operationally scaling it up.
Okay, thank you very much.
Thank you. Our next question comes from Ken Gawrelski from Wells Fargo. Your line is now open.
Thank you. Two, if I may, please. First on AI-powered search. You have a number of AI-powered search interfaces, including three most prominently, AI Overviews, AI Mode, and Gemini. In the future, should we think of these as distinct experiences or that will be long-lasting, or more experimental now, and Google will eventually focus on one approach going forward? And the second one is more on the financial side. You continue to experience very healthy gross margin expansion. We see the TAC, sure, but Anat, you also talked about the offsetting depreciation expense. Could you talk about beyond those two buckets where you're seeing the the real savings on the COGS line and driving that gross margin expansion, and maybe even how we should be thinking about that going forward. Thank you.
Okay, now maybe on AI-powered search and how do we see our consumer experiences. Look, I do think search and Gemini obviously will be two distinct efforts, right? I think there are obviously some areas of overlap, but they're also, expose very, very different use cases. And so, for example, in Gemini, we see people iteratively coding and going much deeper on a coding workflow as an example. So I think both will be around. Within search, I would think of AI overviews is scaling up and working for our entire user base, but an AI mode is the tip of the tree for us pushing forward on an AI forward experience. There will be things which we discover there, which will make sense in the context of AI overviews. So I think will flow through to our user base. But you almost want to think of what are the most advanced 1 million people using search for, the most advanced 10 million people, and then how do 1.5 billion people use search for. And we want to innovate, and so I think this allows us to do that. But the true north through all of this is user feedback, user satisfaction, user experience, and so that will determine where this all works out in the future.
And to your question on gross margin, a couple of trends to highlight there. And I've mentioned this in the prepared remarks. You've seen improvement in tech that's really driven by the change in revenue mix with a continued search growth, and then network revenue declines. Network revenue has a much higher tech rate. So that mix is helping us from a gross margin perspective. So think about that as well. Now, we do have depreciation for technical infrastructure hits in primarily in two places in the income statement. One is in other costs of sales, and the rest is in R&D. So it is in that line item that's impacting costs of sales. Now, we've had some efficiencies there, and I did mention the improvement in our overall cost of or headcount growth and compensation, kind of moderating those growth. So that helps us as well more than offset the depreciation increases in Q1. But as I mentioned, this number will be higher in the coming quarters. Recall, we said approximately $75 billion in CapEx, which is up from 55 or just over 50 billion last year. So there is expected to be quite a significant increase in depreciation.
Thank you. And our last question comes from Ron Josey from Citi. Your line is now open.
Great. Thanks for taking the question. Philip, I wanted to touch a little bit more on your comments around direct response in YouTube. I think it's been improving and been a driver over the past couple of quarters. I'd love to hear more just about what's driving that. Is that the demand gen and integration with PMax, or are users perhaps more involved on direct response now that Shorts usage is rising? Would love your thoughts there. Thank you.
Yeah, I think there's a lot of different factors. Mostly we continue to help our customers really using our AI-powered tools. You mentioned a few of them to drive performance. That's a very big one. As I mentioned before, we're also happy with the progress we're seeing on Shorts and closing to the monetization gap here to the overall business, which is actually really nice to see, especially in the US. So we're very happy with that. Yeah.
And, I'll just chime in to say YouTube just celebrated its 20th birthday. And, we now have more than 20 billion videos on YouTube, and we get 20 million videos uploaded every day. So I think it's a tremendous platform. And thanks to all the creators and users who have supported us there over the years.
Great. Thank you.
Thank you. And that concludes our question and answer session for today. I would like to turn the conference back over to Jim Friedland for any further remarks.
Thanks, everyone, for joining us today. We look forward to speaking with you again on our second quarter 2025 call. Thank you.
Enough, ladies and gentlemen. That was Google's Q1 2025 earnings call. I'm a happy Google shareholder. I'm stoked about what they said. Yeah, CapEx still $75 billion. They want to keep on track with that. Things are going well on the advertising side. Gemini, built directly in via AI mode and externally, are doing great numbers. I couldn't be happier. This is a great start to the Mag 7 earnings, and I think it bodes well for the entire season, not just for Google, but for all of these companies. So, yeah, this is really, really good. Now, they even said, because obviously tariffs do impact a lot of companies that do have, products that are in China and everything. They said advertising is affecting a lot of the businesses, but they're really seeing the main impact from advertising for Q2 of 2025 coming from, APAC businesses, the Asian Pacific businesses. So that was interesting as well. They're not really seeing too much over on the US side, even if their products are from China as well. That's interesting. Overall, good. I would like cloud growth to accelerate. They said that they're going to be reinvesting a lot of that CapEx on the back half of 2025. We'll see. That's very good. Any questions, ladies and gentlemen? That could be Google, that could be SoFi, that could be Robinhood, that could be NVIDIA. I don't do a lot of live streams. However, I think I'm going to continue to go live during the earnings seasons, just because I'm listening to these calls anyway, so I might as well jump in and do it like this. If you guys like this sort of setup with the chat on screen, with the stock on screen and everything, let me know and I'll use this software more often. I got to tweak it a little bit. It's so customizable that it's almost a little overwhelming. But yeah. Fargo said, does anyone have any recommendations for me? No one has recommendations for you. You got to go on and figure out your risk tolerance, understand what you like to hold in your portfolio, understand your timeline. When do you need the money? Those are all things that are going to help inform your decision. All right. Maestro says SoFi. Yeah, it's a big stock that I hold in my portfolio, but mainly it's a company that I cover quite often here on YouTube. I found that there was a big information gap between what I was looking at for the stock and then what also people were covering online. For companies like Google, for companies like NVIDIA, these are actually not companies that I cover so much, because I also find that the information online is so readily available, and half the time I'm learning. But on SoFi, I found that was, no offense, but that wasn't the case. Yeah. So I just found a little hole in YouTube. Love the chat to the left. Keep doing that. Okay, cool. I'll do that. That's easy. I can do that. Let's see what else here for questions and comments. Oh, maybe I'm a little far. Now it'll look like I'm actually reading them. But I have my own screen. Sorry to, break up the magic trick. You're holding Hood as well? Yes. Yes. Hood is a very, very fast growing position in my portfolio. Very fast. Which one of your holdings are you most excited about for this quarter, not long term in general? I'm very excited for SoFi. I know that sounds like a cop-out answer, but they have made a lot of changes this quarter. I think you're going to see a very aggressive Anthony Noto, the CEO. I'm excited for that. That's going to be a lot of fun. Overall, I mean, the one that I'm really paying attention to, though, obviously, is going to be NVIDIA, but you're sort of holding me down for just a quarterly thing. But NVIDIA is the number one company that I'm buying right now. No, I don't really do space stocks. Sorry. Maybe one day, but I'm too old. I mean, I'm not too old for space stocks, but I mean, I feel like I'm getting to a point in my career where the market has to be sort of made before I take position in it. And space is definitely not that. I like the stock chart during the live sessions. Thanks for the stream. Thank you. How do you see the possible Google breakup? I don't think about it at all. If it breaks up, we'll get shares in whatever respective companies they break into. Yeah. I like the sum of the parts of the business. Obviously, as a collective, it's great, but I like everything individually that they're doing. I don't think that that's something that I should be worried about. I think if Alphabet is broken up, that they'll be worth more than a single company, but I want them to stay together. Yeah, exactly. Says open-minded logic. That works, eh? I have some NVIDIA, but it seems that it's got impacted a lot by tariffs. I mean, it seems to have gotten impacted by the license restrictions for the H20 chips. Overall, I think that it's a company that's being priced at cheaper than tobacco companies. Like literally Philip Morris is more expensive on a forward PE basis than NVIDIA. And yet NVIDIA is at the cheapest PEG ratio they've ever been at, while potentially growing 50+% next year. Wall Street's assuming a 50+% next year. TSM just came out and said they think that their chip revenue is going to double this year in 2025. So, largest AI chip customer that they have, NVIDIA, as cheap as Philip Morris. I don't know. Plus, like, how many chips are even going directly to China? Like, where's all that Singapore revenue coming from? Maybe they're going to get their chips regardless. Are we in a bull trap? I mean, maybe there's some companies that have ran up quite well after the tariff announcements, but if you look at something like Google, for example, we're still very much down on where we originally saw it. I don't know if we'd call that a bull trap, but could potentially be. I won't write that off. Yeah, this is not a trading channel at all. I'm not a day trader. I'm a very long-term holder. I have this saying on the channel all the time. I buy great companies and I hold them for the long term. Okay? I'm looking to make generational wealth. I've made good money buying great companies and holding them for the long term. Okay? Some of my largest positions have been companies that I've held for years. Tesla, Shopify, NVIDIA, Salesforce, companies that have done really well. That's what I like. The news is often framing AI as a competition risk for Google, but it looks more and more like it'll be a net positive for Google long term. This is what I'll say. Google has the most to lose from search being taken away. I think that that's clear. Okay? The thing is that every single business is going to benefit from artificial intelligence. So is there going to be companies that are greater winners in the next technological era? Yes, I actually think so. And AI or OpenAI is probably the biggest example of that. A company that has come out of nowhere to be potentially looking at revenues in 2029 of $125 billion. That would be by far the fastest growing company ever. Right? So that's important to understand. However, the valuation that the stock is getting as if they are going to shrink or die during this time. So I think it's all relative to how people are pricing it. And right now, it's completely mispriced. Do I think that they are going to be the largest winner and that they're going to hold up a 90% market share during this time in some sort of combined search and AI query, base? No. But that could also potentially be a good thing. Okay? I think that gets regulators off of Google's back if that's potentially not the avenue that people go through every single time. If they have a competitive, top 3 position, then that can still be very, very good. Being a top 3 player in a market and you see consolidation or either capitulation or consolidation from all the bottom players. Either they leave or they get bought out or something along these lines. Google can make a fantastic, amazing business while also not being a regulatory threat could be good. And look at that. JD, thank you very much, my friend. I forgot that was even set up. Isn't that fun? I think if you have a message, it reads it out. So, JD, you should have connected a message to that. Thank you, though. I would sell any options and take profits when you can. Very unpredictable market. That could be the case. I'm sure there's some logic to that. I think that what gets people excited is that this is also the type of market that if you do play those right, it makes millionaires of some people's positions. I won't be the one that's taking those outsized leveraged bets. I'm trying to do that in terms of a safe way of just buying with every dollar I have to put into growth companies. But I don't necessarily think that this is, somewhere where I want to like go all in on margin or something like this or write insane options. I trust the genius Sundar. So I am a Google shareholder, okay? But if there's one thing I can say, I'm not that big of a fan of Sundar. If there is, he's fine. I think he's fine. But let's think of the Mag 7. Who are all the Mag 7 CEOs? Andy Jassy, Elon Musk, Mark Zuckerberg, Jensen Huang, Sundar Pichai. What are we missing? Amazon, Meta, Google. Who are we missing? How am I missing two companies? Is my brain fried? Microsoft, Nvidia, Amazon, Google, Tesla, said that one. I said Andy Jassy. And Andy Jassy is, oh, yes, sorry, Tim Cook. Tim Cook. Yeah. Okay. Out of all of them, I would pick frickin' Sundar Pichai at the very bottom. No bueno. Okay? In terms of top CEOs. And maybe that could be a little bit Tim Apple, yeah. Yeah, and Satya Nadella. Satya Nadella is a frickin', that's a genius. Sundar, I'd put him 7th. And that's fine. You're in a list of great names there. You're in a list of great names. But he's not a Jensen, he's not a Zuck, he's not a Tim Cook. Everyone's saying Jensen's the best. I mean, I know Elon Musk has gotten into a lot of political stuff lately and has definitely gotten distracted by a lot of other businesses, but he's also the only one that's running multiple multi-billion-dollar businesses. I'd say out of the greatest actual entrepreneurs out of all of them, I'd say Elon Musk is still up there. And I know that there's a lot of distraction from that right now because his stock is down. But come on. XAI, Tesla. This dude has always had the most long-term mindset in terms of being able to even see where Optimus was going to go, or self-driving, or SpaceX, so I'll still give him the number 1 slot. Jensen probably number 2, that or Zuck. Zuck is still a giant. Like, how old is Zuck now? Is he even 40? Is he 39? I would not bet against that at all. Is he even that old? How old is he? Zuck age 40. Okay, he is 40. I would not bet against that at all. Sundar Pichai literally could go. I wouldn't even, I might buy more. Tim Cook is amazing. I think he's good. I don't like Apple, but I don't necessarily blame it all on Tim Cook. Zuck is a lizard. Are we are we trimming SoFi if it runs to $18 to $20 on earnings? No. I don't think I will. Now Pichai is a legend. Oh yeah. Pichai is a legend. Why? What has he done? Google was losing so bad in this AI race that they had to bring in the original founders. Sergey Brin had to step off of his friggin' 400-foot yacht to go back to work because Sundar Pichai was not handling it himself. What a legend. I don't know what Sundar Pichai has added to the business. It's not that I don't like him. It's that I can avidly think of things that I like about all the other six. And he just is kind of there. Sure, he's fine. I mean, I liked him back whenever he worked for the company rather than ran the company. 40 is a baby CEO for running one of the largest companies in the world. You are correct. But that's great, though. Like this guy was running a multi-billion-dollar company in his 20s. Okay, SoFi really quickly. If it ran up that much, no, I would not trim. However, 2025 would be a big year of like evaluation. That's what I would say. Evaluation. Jensen went to China himself. Seems like the Chinese market is still very important to NVIDIA. Absolutely. Couldn't agree more. Zuck looks uncomfortable in human skin. Google beating EPS by 40%. I mean, dude, they did great. They did absolutely fantastic. By the way, like let's just shout this out again really quick. Wait, where's my screen? There we go. Earnings Hub. I just partnered with them recently. Absolutely free to use and go down in the description down below. Sign up for them. Support the channel. But they give you all the calendars and everything. If we go ahead and take a look, you can see what is going on. You can listen directly into the earnings calls. So we could just listen to Intel right now.
Out next year as well, although I think it's...
Right. But yeah, see when all these companies are doing their thing. You can go through all the different months or whatever. But let's go back really quick. Where was Google? Sorry. There we go. Yeah, so EPS beat by 39% and revenue beat by 1.5%. Very easy way to just look at all this, including, you know, when their next earnings are, you can set a reminder to, you know, email you or ping you whenever their next earnings comes up. You can see what analysts have to say, everything along these lines. Great app, free to use. And if you sign up using the link down below, it supports the channel. But I love Earnings Hub. It's free, says Mai. Yes. Yeah, it's way better than Earnings Whisper, which is the one that I used to use before. It just looks terrible. It looks like it was built in the 1990s and then they never changed a thing. Yeah. What's your top pick for the Mag 7? NVIDIA. I had to think about that for a second. I was like, what's the name of that company that I've been buying forever? Amit said that you have to change the name of the Boys in the Hood name. Yeah. Yeah, they don't like that either. I don't know. We'll do something. We'll make them happy. We'll do it to make them happy here. Let's take a look at Google stock really quickly. Okay, does that work? That should work. All right, so yeah, all the advertising plays are moving big. Amazon or Meta up 4.4%. Amazon up 1.8%. Google up 4.67%, just under that 170 mark. The Trade Desk, this is my newest position in my portfolio, up 3.2%. If you guys don't know, this has fallen off a cliff. I mean, like, holy, at its highest, 141. Then at the time of its earnings, roughly about 120. Then the next day, that fell to 83, kept falling to the low of $43, and now trying to make its way back up. We'll see if it can continue to grow. But I think after a few earnings calls of just back to regular business, people will calm down and let things go back to normal. James says, this was my first time watching the channel. Really good commentary and had a lot of fun. Thanks for hosting the call. Thank you. Biggest letdown from this earnings call. I don't know. Probably just the way that they said that they were going to spend their CapEx, but I'm being really picky. I actually thought it was fine. The speed of cloud, I wish was a little bit faster. I wish we could hold up the 30% growth rates. That's not necessarily from the earnings call. I guess if you mean earnings in general, then yes. All right, ladies and gentlemen, I'm going to wrap there. I got to get some food in me, have some dinner, and work on my next video. Thank you all so much for watching. Really do appreciate your time.